What credit score is needed to get a loan? If you're looking to purchase a home, credit is going to be a huge, critical factor in obtaining a home loan. You may be wondering what credit score is needed to get a loan. We're going to take a look at various loan programs and talk about how credit affects each one. You'll want to be sure and watch to the end because I'm also going to give you some tips on how to maximize your credit score, which are so key to this overall getting a loan process. Now, not only will credit score affect your ability to qualify, but it's also going to impact your interest rate and potentially the cost of mortgage insurance. This is important. And by the way, if you haven't already subscribed to this channel, please take a moment and do so. I am always updating information about the home loan process, and you're going to want to subscribe and be sure that you get those triggers and notification if you're going through this process, because this is the real scoop. All right, the minimum credit score on conventional is about 620. All right, so I'm talking about conventional conforming loans. These are loans that are backed by Fannie Mae or Freddie Mac, which are government-sponsored enterprises. Essentially, they purchase conventional loans in this country from lenders. So 620, that's going to be the minimum with conventional conforming loans. FHA, now this is where with FHA will go down to a 580 credit score with minimum down payment, which is 3.5%, but they'll actually go down to a 500 credit score with 10% down. But keep in mind, we got to back up here because even though that's what FHA's guidelines are, most lenders have what is called an overlay, so additional criteria on top of those posted guidelines. So not all lenders out there are going to offer loans down to those types of credit scores. And on average, I would say for FHA, kind of think 580 or higher. Some lenders cut off at 600 minimum credit score. Some lenders cut off at 620. Some even cut off at 640. So the minimum credit score is going to always vary by lender. These are just the mainstream program guidelines themselves. Now VA, what's interesting about VA is VA actually doesn't have a minimum posted credit score. However, back to the whole overlay concept, most lenders will cut off on VA right around 580 on the credit score. The thing I would really caution you about though when we think about credit score is realize that while it's a very, very important number, especially on a conventional loan, but on all loans, the next part of the credit conversation is it's not just about score, it's about what else is going on in that credit profile. So I have seen people that actually have a higher credit score, let's say it's a 640 credit score and they're applying for an FHA loan, but they can't obtain FHA financing because the credit profile itself does not meet the lending guidelines. So there's two parts of this process, kind of like the two-step, right? So the first step is credit score and what is it? Then the next component, the next step is what is the credit profile and does it meet the lending criteria? Keep in mind, the true way to know your credit score when you're going through the home loan process is to have a home loan lender pull your credit. There are so many different algorithms and so many different types of credit scores that based on how you're getting that information is going to vary. So if you're just online, you're checking your own credit score, or you're using the credit score that your credit card company gave you, or you just bought a car and they're giving you your credit score, it's not going to be what the home lending credit score is, simply because there are so many different algorithms that drive credit scoring models. Here are my 2 tips to maximize your credit score. 1, making sure that you don't have any 30-day late payments reflected on your credit profile. So that's 30-day or more. The way that credit reports is 30-day late payments, that's the first hit. 60-day late payment, that's an even harder hit. 90-day late payment, that's going to really whack the credit score. 120 days, and it goes from there. But initially, one 30-day late payment can drastically drop your credit score. So we want to be sure that you're thinking about, especially this time of the year, vacations, distractions, think about setting up auto pay so you don't have any late payments. And the second tip is keeping your balances on your credit cards at 20% or lower of the limit. Now it used to be 30, I'm saying 20. Sometimes though, it's an individual thing. Sometimes it's having a $10 balance on that credit report. But in general, if you can work to keep your balances on your credit cards at 20% or lower of the limit, that is going to help maximize your credit score. So let's walk through that. If you've got a $1,000 limit, on your credit card, you're not going to want to owe more than $200 as you lead up to going through the home loan process. $200, 20% of $1,000. That's the math. So now you have a lot more information on what credit score is needed to get a loan. If you're in Arizona, California, or Colorado and you'd like to talk with me about your personal scenario, please feel free to call or text 480-725-0150. Otherwise, if you have questions, comment below. And don't forget to like, share, and subscribe. Until next time.